All right, guys. Sorry, I'm over here rocking out early in the morning. Today we have GDP initial estimate. If you don't know the difference, all right. Every time we get GDP data dropping each month, every month we have GDP data. The market is down a ton yesterday too. It might actually be time for me to start buying stuff up. Again, my portfolio is still very green, nicely green. But it might be time for me to buy up some stuff now because things are down so freaking much yesterday. Let me know if you guys think it's time to buy stuff up as well. We'll see. But yeah, so GDP data comes out today. The reason today's a really important one is because today's what's called the initial estimate for GDP. There's a bunch of different estimates and revisions. They state one, and then they state the let's look at the Q as well. Tesla down at 212s, Q all the way at 460s. Looking like the SPY now. Nvidia over at 113, so very, very low, very, very low. We were talking about maybe 110 hit yesterday, and it looks like it did hit that. But anyways, back to the point here, which is that the initial estimate is one of the biggest, most volatile reports for GDP. It's just one of the biggest ones. All right, so we're gonna have AI explain it because they can just explain things better than I can. But again, initial estimates when they first build, or when they first estimate it. So again, we're gonna detail this a little bit better. So when it comes to GDP, the Bureau of Economic Analysis (BEA) in the U.S. releases three main types of GDP estimates for each quarter. They are the advance estimate, which is today, the second prelim estimate, and the third final estimate. Each estimate becomes progressively more accurate as the data becomes available, but I would argue that each estimate becomes progressively less influential over stock price because they're just refining the initial estimate, the advanced estimate, which is today. So today, released about 1 month before the end of the quarter. It's based on prelim and partial data, including estimates for trade, inventory, and other key economic indicators. It's one of the most volatile reports for GDP. It's one of the most important, one of the most volatile reports. It provides the first glimpse of the economy's performance for the quarter. It is often subject to significant revisions, but again, it can be one of the most volatile GDP reports. And so again, that's what we're going over. Today, I'm going to do a poll here. Vote on the poll. Let me know how you feel. All right, so the estimate for today, I believe, is 2.1%. At least that's what Market Watch had. We'll have to see what the other ones say. Do you think today's GDP do you think today's advanced estimate comes in higher or lower than the let's see what they're expecting. So again, I know Market Watch had like 2.1%. So and this is quarter over quarter, just to put this in perspective, right? So Market Watch, okay, so yeah, so around 2.2% is what I'm going to put it up as. And so you can vote on this poll right now and tell me what you guys think. It is subject to change, and the reason we can get a lot of volatility from this report is simple. It's because this is our advance estimate, right? So we can expect certain things, like the analyst expectations can be certain things, right? But it doesn't mean anything, and we can come in wildly higher or lower than the analyst estimate. And so with that big disparity between what's expected and what the actual GDP data shows up as, we can get a lot of volatility from that. And so that's something to watch. What's up, Urban? What's up, David? What's up, Pawn? Anthony? What's up, guys? Good morning. Good morning. We're here early today. Again, GDP data drops at 8:30. Yeah. I figured out what I'm going to do. I think the way I'm going to run my channel is I'm going to start. If we got economic reports, I'll start early. If we don't have any economic reports, I'll start later. It's probably like we don't have nothing going on, I'll start later and we'll day trade and do all that stuff. If we have big reports like today, really the last 2 weeks have been very boring. We haven't had any real economic reports. The biggest thing we had last week was Jerome Powell doing a press conference where he didn't really speak about economic predictions very much. And he did that press conference on Tuesday, I believe. Maybe it was Monday. And then after that, we have basically had nothing except for jobless claims over the last couple weeks straight. It's been boring. Yeah, so let me know if you can hear the music. What's typically the market reactions to higher or lower prints? Well, right now I would argue the market wants economic strength. For a long time after like we had inflation spike up to 10%, the market had an inverse reaction to how it normally does. And I would say like inverse to convention, if that makes sense. Not to use too many like big words, but like the market would move opposite to what was considered conventionally good. And so what's considered conventionally good is high GDP, economic strength. But for a while after inflation spiked up to 10%, CPI is what I'm referencing. For a while after that, we just didn't want economic strength like we used to, and we feared inflation. And so more economic strength does equal more inflation, although GDP is one of those reports in which GDP is one of those reports in which typically higher is almost always good, I would argue. Yeah, so they have all these AI. Yeah, let's go with the impact of GDP data. What is all this stuff, dude? Thumbnails to edit the design in Canva to match the colors and theme you want. Developing large caps. Deleveraging large caps may continue as de-risk of yen. Yeah, again, the crazy thing that happened over the last few days, like look at Nvidia and look at how much it's down. Again, Nvidia was flying really, really high to begin with. So I don't know if it's that much of a shock. And I think Nvidia, they did a 10-to-1 split, or a one. They did a 1 to 10 split recently, and so they still look fine trend-wise. The big risk is like a lot of investors are going to buy heavy into this stuff now. And we'll see what that means. My portfolio is actually red for the first time. I'm going to restart TOS actually for a second too. So give me a second. I'll put something else up on screen. The cool thing about AI and Chat GPT is that, it can literally hook up. It can literally hook up Like, look, let me show you guys this. Like, look, this is how I'm using AI just to show you. Like, look at this. So, like, I use AI a lot. You can kind of see it, but you can also hook it up to. This is a specified one that builds. Like, this is a specified one that builds. It hooks up to Canva, so I could say, create me a infographic that details why you should pay attention to GDP advance. Man, I can't type. Estimates. My grammar self and infographic. All right, let's see how good their infographic is. All right, we're gonna restart toss for me as well. Yeah. See, the only problem with AI is like when it creates it. So like, look, here's AI's infographic, right? So when it creates it, it's still not really what I would say is good. You know, like yeah, it created it, but like it created it, but is this good? Is this even like legible? Not really. Like it looks like it gave me what it thinks an infographic would look like. 0 foot. It gave me what it thinks an infographic would look like, and there we go. We got tossed back up. Yeah, there's a lot of really cool indicators. I use Chart Prime though. Urban Chart Prime is probably my go-to. It's really really nice. Chart Prime. All right, we got our charts back up. Yeah, there we go. Okay, good. Tesla down to 212s. Yeah, it's not a horrible one. All right, we're back. Anyways. GDP data. Really big report today, guys, honestly. Again, it's the advanced estimate for GDP. It's really, really important. All right, so it's the advanced estimate. It's expected at 2%. Jobless claims are expected at 237K. Last time they showed up at 243. So last time jobless claims showed up much higher than expected here. Yeah, I mean, crypto's not dying. Here's Bitcoin. Bitcoin is still at 65K, right around the highs, the lifetime highs, you know. Like, this trend here is definitely not a dying trend. Like, here's Bitcoin. Up to lifetime highs, consolidation since then, basically, is what Bitcoin has done, right? So this trend right here does not look like a dying trend, in my opinion. Maybe, I mean, this Bitcoin, right? Maybe it, I mean, I don't know. Definitely got some red action. I'm still up thousands on the year in my equities portfolio, but my portfolio is definitely redder, you know. Yeah. Every time we get really bloody every time we get really bloody action, I'll post this meme. Every single time. I post this Elmo meme. You know. Is it time to buy up? Here's a bigger question that we should ask, right? Is it time to buy up stocks right now? Again, stocks specifically are down pretty big, mostly led by Nvidia, I would say. Nvidia down to almost 1/10, which is a pretty big drop from its highs. It's a pretty big percentage drop as well, right? Just to put this into perspective, Nvidia, on a percentage basis, let's take a look at what this is. So Nvidia, just in the last day, has dropped from 125 to 115, which is about a 10% drop, a little bit less than a 10% drop, about an 8% drop, right? But relative to highs, so the highs are at 140, relative to highs, Nvidia's down 17%, right? Which is a pretty big drop, obviously, very major drop. For me, like, I think we have a lot of discounts in stocks, but it really depends on how long you want to hold it. If you're willing to hold it long term, I think we're going to be fine, right? But I think short term is where we get some big volatility coming in play. I think that anything could happen, and I think the market could go up, down, or sideways, and market can keep dropping. Is basically what I'm saying. And I really have no idea what we're going to get. Looking at our polls here for GDP data, 42%, 41% think higher, 37% think lower, 22% said I don't know. Let's see results. And we asked people. We'll put a timer up as well, like we always do. It is 6:40 market time. We've got about an hour, and all right, now I'm drawing a blank. All right, so we got about an hour and 45 minutes. Yep, here we go. Took me a second. Hour and 45 minutes until GDP data comes out. Hit the like button. Yeah, the 10-year drop. Did the 10-year bonds drop? Well, the yield went up a lot on the 10-year. So, like, look, here's the 10-year yield, right? Here's the yield. So yesterday, the yield rose big. It's still only at 4.3%, which an interesting thing is, like, right now, these rates for the 10-year suck, dude. Like, these are bad rates. I mean, they're not, like, the worst ever, of course. But an example of this is, like, look. You could get higher paying. You can get a higher yield in CDs right now. You can get a higher yield in short-term bonds versus, like, why in the world would you invest in 10-year treasury bonds right now at 4% roughly? That's very low right now, relatively speaking to everything else. Again, everything else is much higher than this. Again, to put this into perspective, right now, short-term bonds, like 1 to 3 month bonds, are paying like 5.5%, 5.3%, 5.4%. And so if you look at something like T-bill, ETF, it's paying around 5%, 5.5%. So it just makes absolutely no sense to, buy a long-term treasury bill right now. So again, here's AI with the bad infographic. The problem is, like, it looks good, but it's not good is the problem. I'm kind of getting onto AI a little bit. I said nothing is readable in that. Make it less information and less stuff on it, but more readable and digestible. Don't make it look like an infographic. Make it actually be one with useful data, not nonsense. Okay, so it basically spit out a bunch of nonsense. Okay, this is why AI is useless to a certain extent. Morning, John. Bear came out of hibernation. I disagree, Urban. Urban says that's true, but more indicators always improves accuracy 100. But what do I know? I mean, I disagree. I don't think more indicators always boosts accuracy. I would argue that that's actually, after a certain point of indicators, there's actually like a negative influence on accuracy. Because, yeah. I don't think we have any big earnings today, right? Again, do me a favor, slap the like button. Yeah, I think so, maybe, David. Like John said, do we buy the dip? I think it's time to buy the dip if you have a long term to hold it. Like, again, I'm not telling you to do anything. I'm not an investment professional. I'm not liable. If you lose, don't freaking sue me because I have no idea what I'm talking about. But I think it's time to buy the dip if, specifically, again, if you have years to hold it. You know, I think if you don't have years to hold it and like you're going to be really emotional about it, then you should probably not buy anything and just wait. Hey, thank you, David. Warren Buffett just holds stocks. He doesn't know what to do with them. He just holds and holds. He was almost 100. Still didn't decide what to do with his stocks. Right, but that's historically the right move, Tim. Like, that's the right move. That's what you're supposed to do. You're supposed to hold stocks inevitably until, you know, you die. Right? Like, that's really what you're supposed to do. Why? Here's why. Because if you buy the right stocks, doing Buffett strategy, right? Buffett likes McDonald's. Okay. If you buy the right stocks, Buffett's been holding McDonald's. Let's see, where did Buffett buy McD? He wants out a 4% stake. Okay, maybe that's the bad one. Coca-Cola. Let's do Coca-Cola. So Buffett bought Coca-Cola in 1988. He owned about 6.2% of the company. Again, let's take a look. All right, so 1988. Coca-Cola at the time, when Buffett bought it, was $2.50 a share. Fast forward, it's now at $65 a share, right? That's ridiculously large gains. And so when you compound that over long periods of time, those are crazy gains, right? You know, if you want the actual percent, if you want the actual percentage increase, Buffett earned 2,600% on Coca-Cola if he's still holding it to this day, right? And so stocks are like, if you pick the right stocks, like blue chip, healthy companies, long-term companies, right? And this takes a mix of betting on old companies and new companies, right? But they need to be long-term blue chip, healthy companies. What do I mean by that? I mean low PE ratio. I mean something that the whole world uses. That's not gonna be obsolete. I would argue like Apple, Amazon, Walmart, whatever you want to do there. If you buy the right companies, they'll all go up thousands of dollars a share. Not thousands, I'm sorry. They'll all go up thousands of percent per share, and that's a crazy big gain that you should, obviously want. And I think Buffett's argument is like, you're going to make those type of gains, right? So imagine this. Okay. So again, here's NVIDIA down to 110. But imagine Coca-Cola, right? He made 2,600% on it. Coca-Cola also pays about 50 cents a share divvy. So you're also going to be making 50 cents a share in dividend payments, right? So you're also going to be earning cash flow from the stocks that you're holding that are also going up thousands of percent. And when you look at compound interest, which means that you use the gains that you make to invest more, and that grows over time, your stake or your investment, then it's a powerful thing. He described it as the eighth wonder of the world, right? It's one of the biggest things that like young traders miss out on, and I'm with them a lot of the time. Like I think a lot of the older population ignore, like one of the things I made a short about recently is Blockbuster's demise and how Netflix came through and wanted to buy Blockbuster, but that Blockbuster basically, Netflix came through, wanted to buy Netflix wanted Blockbuster to buy them out for like 50 million, right? You might be like, wow, 50 million, but 50 million at the time for Blockbuster especially was a very measly sum of money. They could have easily bought Netflix in 2000. I think it was like 99 or 2000. They could have easily bought Netflix. At the time, Netflix was a mail order rental service. So like they would ship you your DVDs in the mail, and you would watch your DVD, and then when you came time you wanted another one, you would pick out another one and return it and get the other one shipped to you within a couple days. You'd get your new movie, and boom, you could watch that one. But going back to my original point, which is that a lot of the time the older population, number one, they refuse to look at the evolution of technology objectively, right? They think things are always going to be how they want them to be. They think that technology evolution is, they fear it more than they embrace it, which is the main difference between young people and old people, is that young people embrace technology evolution. The older population, a lot of the time, fears it, gets really sensational with it, doesn't end up looking at it objectively, and ultimately when they run businesses like Blockbuster, stay stagnant and refuse to move. They think that their business is always going to be good. And anyways, eventually, fast forward 20 years, Netflix is the behemoth company that it is today, and Blockbuster is no more. It closed its last store in like 2010 or 2009, and Netflix ironically made a show about the last Blockbuster that you can now watch on Netflix, the largest streaming service in the world. So yeah, it is what it is. Streaming's really what took them out. Obviously, when you can start watching movies. The problem with Blockbuster is that as soon as they recognized that streaming was going to be a thing, they should immediately pivoted their business model, started buying out all the streaming services, and we could have been watching streaming on Blockbuster right now. Instead of doing that, they had a dinosaur CEO who just kind of stayed there, talk like making fun of people, and in the end they lost. What's up, Freddy? What's up, Yowzer? Yeah, it's all good, Urban. FinViz is where I go. Yeah. FinViz is good. Our New York City bank trade, we trimmed a bit. Shib. What's your favorite position to buy right now after all this big moves? Let's ask the chat. Yeah, so what is your favorite stock to buy currently after all this red action yesterday? It's a good question. Yeah, Netflix used to mail DVDs. ETH falling. Yeah, Bitcoin fell on IPO or on ETF day for Bitcoin. It did a very similar thing. All right, guys. GDP data today. Yeah. A lot of people traveling right now. Let's see what the chat says. Do you think the yen carry trade unwinding is having any impact on equities? Maybe. What are those stocks saying? About Nvidia waiting to buy Tesla and Coinbase. Netflix is phasing out DEI, so is Microsoft. Grayscale sold 1.5 billion ETH in 2 days. They have another 17.5 billion left to dump. Then ETH moons. What's up, Yair? Nike. Yeah, Nike's okay. I bought Nike, but who knows? Coinbase is pegged to the price of Bitcoin. Tesla's okay. I like Tesla long term. VYM is that? Let me look this up. Let me just go back to regular chat GPT. Yeah, so it tracks the performance of the FTSE High Dividend Yield Index. It's composed of large cap stocks that are forecasted to be above average dividend yields. It holds JP Morgan Chase, Verizon, Intel, Procter, Gamble, Johnson and Johnson. Where's Intel in all this craziness? Intel's down. I'm still green on my Intel position though. What is Intel's dividend payment? 13 cents a share. That's not a super high dividend. It's only about 1.5% annually. What about Verizon? Verizon pays almost 7% annual dividend, but they go down over time. So if you're holding Verizon, I mean, Verizon's kind of a good company over the last year. You know, they pay a high 7% dividend. So a high 7% divvy for Verizon. And Verizon's actually up on the year. Checking out the other ones in that list. Let's see. So the other ones in your list are CPRX. I've never heard of CPRX. Catalyst. Yeah, I don't like biotech. John, how do you get so much knowledge? Tell me all. You just pick it up along the way, to be honest, man. Cracker Barrel. I like Cracker Barrel as a restaurant. I don't know if I want to bet on their stock, though, and they're down big on the year. Down big on the... Cracker Barrel's been downtrending since 2015. Or no, since 2021. I like Cracker Barrel. I think they make money, but also, like, investing in their stock's probably a little risky. TNA. Yeah, this is the small cap ETF. I don't really want to buy that either. Coinbase is all right. It just depends on what crypto does. Anyways, Nvidia is still down big here. So again, Nvidia all the way down to 113s. Q all the way down to 463s. Chipotle did good for earnings, but it has more downside. Yeah, Chipotle recently did their split. Conspiracy theories are glazing over this drop right now. OMG, the stock market is crashing. I know, honestly, dude, like, anybody that says that has a lot of inexperience. Because, like, look, this isn't a crash yet. It's nowhere near a crash, right? Like, we are down percentage-wise. Like, we're down at 465s from 5. So... percentage-wise, we're down 7% from the highs, you know, which is a correction. It needs to happen, right? Like, I think it needs to happen. I've been saying this a lot, which it genuinely needs to happen. But it's not a crash yet. Now, if we drop like this, if we look like this, and again, I'm not saying we don't. Again, I told you guys, like, if you guys remember what I said over the last, like, month or two, I told you guys I stopped buying stuff up. I skimmed some of my positions down. Like, if we drop like this, again, then we could start looking at maybe a crash, especially if it's something like this. Then you could argue that we're in a crash, right? And it might be a necessary thing because with all the craziness that's happened with microchips. Again, I told people once, I'll tell them again. The main reason we're dropping like this is specifically because of NVIDIA. Like, NVIDIA has had a really bad couple of weeks. I told people exactly why I thought the market would correct or crash if we do, which is that NVIDIA coming all the way back down. Like, if NVIDIA corrects down to 1, I think I said to 91, 110, and the whole market follows it, that could evoke a pretty negative response, and that's kind of what we're getting here. The good news is that if we drop too much, I'm just going to start buying stuff up, to be honest, which is what everybody should kind of do, just long-term buy stuff. Almost cursed. I'm just bullish on Cracker Barrel. Yeah. Seems like an orderly correction to me. Me too. I mean, it seems like something that, like, is bound to happen, you know. Like, it's something that needed to happen. Like, anybody buying up Nvidia at the top, like up at 130s, 140s, 150s, is taking a really risky bet, right? I remember Nvidia was 141 a couple months with no major news. Right, it just needed to happen, Red. Yeah. Yeah, I know about the inverted yield curve. So again, if you don't know what the yield curve is, right? The yield curve is when short-term bonds pay more than long-term bonds, and you see this a lot reflected. Like, I'm a big 0 to 3 month holder of bonds. I think they're called bills. But yeah, I hold a lot of these short-term bills right now because they pay more than the 10-year. Again, is at 4.3%. The 0 to 3 month bills are paying 5.3% annualized, right? So you're not getting 5.3% in 3 months. That's the biggest misconception about bonds, is people think that they're going to get paid 5% in a couple months. If it was like that, people would just buy up four of those contracts every year and make 20% freaking yearly, which would be amazing. But again, unfortunately, it's not like that. Is there a symbol? They should create a symbol. But we could look at SHY. Right. This is 1 to 3 year Treasury bonds ETF. Right, so here's 20-year. You know. Yeah, AMD. Yeah, AMD's slightly green on the day. What about MU? MU's down pretty big too. Kava? Yeah, I remember CAVA. It's a big stock. Market corrects every year on average, twice a year, 7%. We are currently at 0. Yeah. When I was a child, my mom told me to grow up, so I grew up. Now I am no longer a child. You can achieve anything if you have a will. 100%, yeah. Honestly, the biggest thing that I see catch a lot of people that I grew up with, right? I grew up in Baton Rouge, Louisiana, which is kind of an hour away from New Orleans, right? And so growing up, and this is the biggest thing that I see, people look freaking ridiculous, bro. Okay, I see people grow up, right? And they are, when you're young and you're in your teens, the bad boy image is cool and ooh, and girls might like it, right? The bad boy kind of gangster image is cool, and girls are ooh, the bad boy or whatever, right? It gets you girls if you act that way. That's why most people, again, if girls like pink bunny suits, I would have dressed up in pink bunny suits as a teenager, back to my point, and you get a lot of people that acted that way, when I was a teenager, just they're from the suburbs, but they're trying to act hard and they're trying to look cool, and they, so they're acting all gangster and bad boy image to try to attract the ladies, I guess. And that's fine when you're a teenager, right? But I got a lot of them that I can see on Facebook, that are still behaving in the same way when they're 30, 40 years old, 30 to 40 years old. And so I just kind of have to look at them on Facebook. And again, a lot of them are struggling to find a partner, and they are, freaking, they've never had kids, and they don't have a family, and they don't understand why. They just can't get any good girls, and it's probably because you're acting like a freaking 12-year-old. Grow up, it's time to be an adult now. Stop acting like a little child, dude, And I think a lot of people just don't have that. Like some people just don't go through it. They never hit that. They never get older. They never start acting older, you know. Tesla started to bounce all the way back. Tesla almost agreed on the day. So here's the Q. Again, Q's down about 7% over the last few days. We are seeing a resurgence here. Again, here's Tesla as well. Right. Is 10% a correction or 15%? 15% all a correction. We get into crash territory when you start hitting like 20, 25. So yeah, so 10, 15% still a correction. Once we hit 20, 25, 30, that's a crash. Depends on how quickly it happens too. Yeah, CrowdStrike. I bought CrowdStrike not that long ago. Is it time to buy it now, though? I still think things are a little messed up from it, though. I still think CrowdStrike, like, permanently destroyed a lot of stuff. Yeah, the whole market's down. The volume's very low, too. Like, the stock market volume... Yeah, stock market volume has been down over the last 30 days. The New York Stock Exchange volume data, the average daily volume on the New York Stock Exchange is down compared to the 30-day prior. Down to 3.8 billion shares. NASDAQ volume is down as well from... It had an average of 5 billion shares. Now it's under 4.5 billion. The decrease in trading volume is seasonal summer slowdowns, market uncertainties related to Fed policies, economic data releases have been light. And so it's not uncommon during midsummer months. But, I mean, something else that we're also seeing here is we're also seeing, we're also seeing a lot of brutal red action here. Is it time to buy up stuff, chat, is the question, you know. Is it time to buy stuff? I don't know. Low volume is bullish? Maybe. I think it's probably time to buy some stuff up, not everything. It depends on how, like, let me see. Where's Apple at? You know, I would buy Apple, but Apple, I remember very recently, like a lot of stuff is still up big on the year. Like Apple pre-July. I remember Apple being under $200 and Apple breaking over $200 was like a big thing, you know. Now Apple's still at $220. Still a little bit too high. Microsoft is a good company. I like Microsoft, and they're down pretty big. I might buy some Microsoft up here. Even though they negatively were impacted by. So we just added a couple shares of Microsoft. We'll see how that goes. They were negatively impacted by the CrowdStrike ordeal, and they were down a lot the last couple days and stuff. But hey, it's all good. Yeah, I like Microsoft as a company. Time to buy is when blood is running in the streets. This is a very famous quote. Is blood running in the streets? Chat. I don't know. I don't know. All right. What was the famous quote? Let me find the quote. See, I use AI for freaking everything, right? Like, literally, it queries. This is why I use AI for everything. The famous quote is attributed to Baron Rothschild, an 18th century British nobleman, a member of the Rothschild banking family. Suggests the best time to invest in the stock market is when there's widespread fear and panic leading to undervalued assets. Is it time to buy right now? Let's do a poll. Alright. GDP data drops live at 8:30. Expectations are for anywhere between 2.1 and 2%. %, quarter over quarter, that is. All right, we'll do a poll here. I think we did a poll already. So looking at our poll here, 47% say higher, 32% say lower. Want a lady go shower, get a haircut, lift up your... Yeah, I mean... Hey, thank you, Michael. Knowing when the dollar cost average is important. Yeah, we bought a little bit of Microsoft. What about Netflix? Where's Netflix at and all this stuff? Netflix has pulled back pretty strong, and I like Netflix as a company too. Netflix is just up ridiculous amounts on the year. Netflix is up like, let's see, they went from $4.50 to $6.50. That's about $200 a share in a $400 stock. Right, so that is 50% up this year over the last. Oh, that's a 4-hour chart, so it's 50% up. Yeah, so 50% up in 2024. Netflix is up almost 50% in 2024. Not quite 50, but close. That's a crazy amount up, right? I don't know if it's time to buy Netflix either. Microsoft, I guess I can't really say much when you consider. I'm just looking at the pullback that we've faced. Like Microsoft is up from 360s all the way to 430s. So Microsoft's up a lot, but it's closer to 20%. Actually, no, that's actually, yeah, they're close to 50% as well, actually, now that I look at it. Not quite. Yeah, they're closer to like 30% gains on the year. So maybe their pullback's a little bit more reasonable. We had this big dip. We'll see what happens. And this market is actually dumb that on earnings of Tesla and Alphabet, Nvidia goes down. Do you like Spotify? I don't dislike it. I don't really, it's not really, something that I invest in regularly. I try to invest in companies I really know and I really understand. And I know Spotify. I know they've done deals with like Joe R. I know, they've grown a lot and young people use them heavily, But as for what they're going to do, I really don't know. Yeah, so this will be an interesting time right now, to be honest. We'll see. All right, Nvidia up to 114s. All right. Yeah, I'm trying to see with Yeah, so YouTube views as a whole are down a lot. They've dropped from big percentages. So YouTube views June 1st were at about 15 million peak viewers. Average viewers was about 7 million. And these are on YouTube stats, purely YouTube stats. Like as a platform. They dropped from about 15 million. And this is, I'm not sure where. They dropped from about 15 million down to under 12 down to almost 11. So from 15 to an 11 dropped. So views on YouTube overall are down 27%, which is interesting. Yeah, Tesla is one of the other. Like, I'm in Tesla long term, right? But the problem with Tesla is that this is something I said before the earnings actually went live, right? So before the earnings actually went live for Tesla, one of the main things that I said was that Tesla is up from 140s all the way to 260s, 250s prior to earnings, right? So one of the reasons I was hesitant to go really bullish on Tesla from earnings is because they were up such a huge percentage over the 4 months preceding the earnings report, you know? And so extension-wise, it's big, right? And how do we know this, right? So people, like, I had a couple people just argue with me about, you know, why Tesla dropped and all this stuff, right? But I think one of the easiest ways to look at it is that Tesla dropped big, not during the earnings call when they released a bunch of the data, right? But right after the earnings report itself was released. So that means like a lot of it had to do with extension because Tesla's numbers were neutral, I would say. But again, it's arguable and it's all good either way. But again, Tesla is up so much over the last 3 months that, you know, you got to gauge the extension here. The question now for Tesla is this dip big enough to buy? Are you buying this dip right here, you know, on Tesla? You know, again, the problem with Tesla, I'm in Tesla long term. My average price is 170s. All right, so I'm in Tesla at the 170s. The problem, short term, and again, specifically short term, it depends on how long you believe in Tesla, right? I'm holding it long term. The problem with it short term is that Tesla is highly volatile. It can go up and down and make these huge percentage returns here, you know, or huge percentage moves in volatility. And so the risk there is obvious, which is that you can buy, if you buy up a lot of stuff now, Tesla can keep on dropping down to under 200, and then you're really in a rough spot. So for me, I'm just hanging out. I'm just going to stay in my current position there. What do you guys think, though? American Airlines, did we have any big earnings reports here? Let me see. Yeah, American Airlines posted 109 EPS versus 104 expected for AAL. Yeah, we'll put up American Airlines. Again, 109 EPS versus 104 expected. A little bit higher than expected EPS. Revenue showed up at 14.33 billion. They expected 14.42, so lower than expected revenue. And again, American Airlines is down significantly on this. We also had RTX drop earnings this morning. We did have some big earnings this morning. RTX is up some, but Honeywell, I'm in Honeywell. I'm down a little bit on my position. My average price is 180s for Honeywell, but that's all right. I'm kind of holding Honeywell long term. I like Honeywell as a company. We also had Hasbro, but yeah, so American Airlines missed revenue. A lot of the time, again, I'm going to tell you guys the same thing. A lot of the time, revenue is more influential over reactions to earnings than EPS. EPS can be good or bad. Revenue's generally the more important one, right? Not always, but generally. And again, American Airlines slightly missed on revenue. They expected 4.4 plus, over 4.4 billion. They ended up showing 14.33 billion. So a little bit under the expected number there for American Airlines. Again, we also had RTX numbers. RTX posted earnings. They're gapping up a little bit. Low volume, though. The whole market has low volume right now, to be honest. ABBV down a little bit. Hasbro had good EPS, good revenue. They're gapping up some. Southwest here, you know, down to $25 a share. Southwest is expected 50 cents a share. They showed 58 cents. Revenue of 7.35. They showed 7.35, and they had 4.5% growth. And they're gapping down some. Maybe I'll think about buying Southwest. I might buy a little bit of Southwest here. I know it's kind of risky. I know it's freaking Southwest. We'll buy up a small little position here, 25. Yeah, we'll go ahead and buy up 25 shares. at these lows down here after earnings. We'll see what happens. But yeah, we'll buy that up a little bit there. Royal Caribbean came out with earnings this morning. RCL are at 161s. Valero, New York City Bank. I didn't even know NYCB was still around. Somebody said yeah, it's a New York City Bank. Honestly, though, wait. Yeah, so here's a weekly chart. Honestly, is anybody investing into this company? I think there's obvious risks investing in this thing. If you don't remember New York City Bank, they're one of the biggest banks behind the big disaster of banking that we had. Robotaxi event could surprise investors, sure, but they pushed it back to October, And originally, I would say it was supposed to be in August next month, right? They pushed the Robotaxi event to October. So, yeah. Next week's a huge week for earnings, economic reports, data. So be ready next week. Next week we got a lot of stuff. All right, guys. All right, Tesla at 214s, chat 214s. I guess like the only thing about Tesla is like maybe there's an argument for a dip buy here using like a 2%, using like a 2%, or using like a $200 risk level. All right. Tesla 214s here, chat 214s. All right, guys. Nvidia at 114s. 114s. We can do a Q&A as well if you want to. The Q&A, the feature is pretty cool. I like it. All right, guys. We got about an hour here. We got about 250 people here live. All right, let me catch back up with the chat. Guys, recommend me a Mag 7 stock to buy for long term. I will take it. Again, I don't want you to copy me. I'm not an investment professional, and I might have no idea what I'm talking about. I might know what I'm talking about. I personally think I do, but I might not, and don't sue me. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade responsibly. VKTX. Pfizer. I think I'm in Pfizer right now, actually. Yeah, I'm in Pfizer, but I'm completely flat. Like, my average price is $30. It's at $29.95, and it's a very small position. So, we're in Pfizer. I think it plays a divvy. It pays a dividend, too, but I'm not 100% sure. What's up, Beach Bum? Yeah, I like Honeywell, Big T. But no, if I had to buy a Mag 7 stock, like I said, I'm looking at, like, Microsoft is, I like it as a company long term. Short term, there's risks because if NVIDIA and microchips start to fail, or not fail, but correct, Microsoft's going to correct too, you know. Meta's cool. Meta, like, I think Meta, you know, I think Mark Z is being less political. And so I think they're going to get more broad adoption and support from people. And so maybe that would be good for Meta. Meta's pulled back from 540s down to 450s. So, you know, maybe that sparks something good there for Meta. And Meta owns Instagram, Facebook, all that stuff. The problem is social media related. Like the risks for Meta are simple. It's that, you know, Again, if you learned anything from Blockbuster, okay, Blockbuster could have bought Netflix for $50 million. They should have done it. They would be, and again, the real problem with Blockbuster was a video rental service in the 90s and 2000s. Again, okay, I generally think that a lot of the CEOs that people pick are good. But I think if you get a CEO that's too stubborn, too one-dimensional, maybe too old, to be honest, I think the risks of those CEOs is that they refuse to embrace new technology. And I think as soon as Blockbuster Video saw that streaming online was going to be a thing, they should have immediately put a lot of resources into either buyouts, developing their own streaming, so forth and so on, and they simply did not. They simply just sat there stagnant, basically talking smack to the new technologies that were out there, refusing to look at it objectively, and I think this is a big problem, with a lot of companies, So again, the problem with Meta is simple. I think Mark is smart, and I think what they have to do is they have to be on the next wave of social media. They have to buy it out. They have to get in early. They have to figure it out. They have to be on the next wave of social media. And I think that's something that Mark is going to try to do. And so I like Meta long term as well, right? I used to not like it. When Meta had dropped down, Meta originally dropped down to the 90s. There was a period in time where Mark Zuckerberg was getting really heavily invested into the metaverse, right? But I also think the new Oculus Quest 3, my son is playing his VR headset all the time now. He used to never play it. They've gotten much better with the VR headsets, much better. But there was a period of time here where Meta was under $100 a share, and Meta had and again, the problem here is after earnings, Mark Zuckerberg had gambled a lot on the metaverse and lost $10 billion with a B on the metaverse. And so people were skeptical. Facebook was losing steam, all that stuff. And yeah. But now Meta has gone up hundreds of percent. It's up to 460s. The problem is it might be a little bit too high up there. If it dips down to 420, 400s, I'm probably going to add some more. But for here, I'm just going to stay tight. I like Amazon as a company. Amazon's obviously one of the strongest companies in the world. Clearly one of the strongest companies in the world. The risk for a lot of these companies is PE ratio related. Right? Let's take a look. What is Amazon's PE ratio? The PE ratios for a lot of these companies are high. If you don't know what PE ratio is, it's price to earnings. It's how much they make versus earnings per share. So again, Amazon's PE is about 51. What about Meta? PE ratio for Meta is 27. Meta's actually got a really good price to earnings ratio. So the amount of money that Meta makes versus its share price is a good ratio. It's good-ish, right? 15 is ideal historically, but times have changed a lot, I think. Amazon's about 51. Let's check Google. This thing queers it really quickly, though. Google. So fast. All right, instead of Pfizer gets Swiss, what are expectations for GDP? Expectations are 2%. Let me put this up on screen. So, GDP is expected at 2%. Quarter over quarter. We will cover the release as soon as it happens at 8:30 a.m. Eastern Standard Time right here. Do we come in high or lower? All right, vote on the poll. Let me know what you guys think. Let me know what you guys think here. All right, so Google has a PE ratio of 27 as well. So Google's PE is actually pretty solid also. So Google's PE is pretty solid. So I'm trying to think of all the other Mag 7 stocks. We got Apple. All right, so we're going to go through all the PE ratios. Apple's is about 35 PE. So Apple could be worse, could be better. But all right, so we got Apple, Amazon, Nvidia. I know Nvidia's got a high PE. I know Nvidia's already got a really high PE. 71 for Nvidia, roughly right now, 71. And earnings for Nvidia are going to be crazy big. Our earnings for Nvidia are going to be the largest stream we've ever done here. I'm going to put that out in the world. So, still waiting. So, yeah, I mean, we're looking at, so we got Microsoft. Facebook is too big to fail. I remember Meta at 98. Those were some nice discounts, sure. Yeah, Google's PE ratio is pretty low. It's at 27. So Microsoft's is about 40. So Yeah, the 10 billion loss day is what dragged them down a lot. Hello, sir. I bought 400 Tesla while falling price around 234. I could not get out, so I still have all. What do you think Tesla going to fall for? Wait, what you think Tesla going to fall while market open like yesterday, or I keep for a few days? I have no idea. Patel, no idea, brother. No idea. I hope you make money. I hope it goes up. I'm in Tesla with you. I hope it goes up. My average price is much lower though. My average price is 170s for Tesla, so I got a little bit more room. The problem with Tesla is that it can be highly volatile for Tesla. Tesla can move a lot. And so with that said, you just want to be very, very careful regarding Tesla. Tesla can move a lot, very quickly, very fast. Tesla can move. It can go in big percentages up and down. Nobody really knows. The bulls are going to say it's going to go up. The bears are going to say it's going to go down. Nobody freaking knows. It has a huge range in terms of the last year of price action and movement. Just in the last 3 or 4 months, Tesla was at 140 3 months ago, $140 a share 3 months ago. And so I would just be careful. I like Tesla. Now, when you zoom out long term, I like it. I think it's on the forefront of FSD. I think robo-taxis, if they can accomplish that successfully, are going to be crazy big. I think they've got a lot of optimistic looks long term. But short term, anything can happen. I would be careful. If it's money that you're not willing to use or that you're unable to lose, I'd be careful then, because anything could happen. Good luck. Hope you make money. Do you have any opinion on big investors doing major selling since the start of the year? Like they're getting in more into cash? Like who? That guy bought Tesla and it went down. Now it makes sense why. Yeah, for sure, Big T. But you also got to understand the business overall, right? The real business is that once you get views, like Google is providing us the views, right? So Google is doing us a huge favor. It's kind of like Amazon, right? Like people who sell on Amazon can complain, but if they weren't selling on Amazon, they wouldn't have nearly like the reach that they have selling on Amazon. Same thing with like Google, YouTube, everything like that. Like, YouTube and Google gives us the audience. Without them, we'd have nothing. And so, if you get a good audience, you can monetize it very easily. I've said this before, and I'll say it again. If you can get over 100 people watching your stream, just 100 concurrent viewers, you can make 50 grand a year just doing that, So, yeah. You got to understand, once you get that many eyes, it's kind of like my wife and I are watching this Backstreet Boys NSYNC video with, was it Lou Pearlman? I think it was Lou Pearlman. Yeah. With Lou Pearlman, right? Lou Pearlman was this dude, this investor guy, kind of shady in hindsight, but Lou Pearlman was he was like a boy band guru. He would build these boy bands up, basically front all the money from very early time, get these groups together, build a monetization around it and everything. But he got in a lot of trouble, was sentenced to long jail sentence because he would he would work these kids for years, building their brand, everything. And to be fair, he fronted the money and took the risk, right? But he would build these kids up for years, and he would just sign them into terrible contracts. They would make $10K a year, And so, they would make $10K a year, and some of the smart ones. Some of the I'm not going to say they're less smart, but some of the more naive ones, $10K, when you give them a $10,000 check, they'd be like, oh, this is great. $10,000, wow. Some of the other ones, the big quote that Carol and I saw is one of the other ones was hey, how much did you make working at fast food restaurants in a year? How much do you make in a year working at McDonald's, right? You're going to make more than 10K, right? Us making 10K over a 2-year period is nothing. And then they realized that the contracts were bad, all this other stuff. But again, I'm torn on it because I think if you could build an audience that big, right, with NSYNC, Backstreet Boy level audience, monetizing it is very easy, very, very, very easy. And I think the beautiful part about technology, again, a lot of old people fear technology, but the beautiful part about it is that, again, I go back to the skateboarding analogy. I used to skateboard. I've told this story before. If you can build and grow a large enough audience with anything, you can monetize it. And so I used to skateboard. When I wanted to skateboard back in the day, I wanted to get sponsored. Every young skateboarder wants to get sponsored, you know. So I wanted to get sponsored as a skateboarder. And back in the day, you needed a sponsor. You needed money to come in. You needed editors. You needed production. You needed all these different things that sponsors could offer you, you know. And so you wanted to get sponsors. That was like your big goal of like wanted to get sponsored. And this was in like the 90s and early 2000s. You fast forward to today, and one of the beautiful parts about tech growth is that you don't need a sponsor like that anymore. Not in the same way, because you can create, you know, edit everything from your phone, build a social media presence, build an audience, and get a lot of views, a lot of interest in your brand yourself without needing a sponsor anymore. Just from your smartphone, you can do all of this stuff. You can build social media accounts, you can grow them, you can get views, you can record videos, edit videos, get a lot of marketing content purely yourself, without needing all this super expensive equipment or anything like that. And so it's a beautiful time. You can monetize yourself in modern age. And if you get enough views, it can be very profitable. And I think that's what a lot of people have to realize. And so, yeah. Anyways, not to go on a long-winded rant. We got 50 minutes, chat. 50 minutes. GDP data is coming out soon. Hopefully we get some. I'm hoping it comes in higher than expected. Like a lot of people are pushing for rate cuts right now. You know, so a lot of people are pushing for rates to go down. I'm not necessarily one that wants rates to go down. I don't want rates to drop. I don't want low interest rate environment right now. Again, you get a lot of people pushing for rate cuts, but I don't think they really understand. They think in their mind, hey, people are struggling. Because people are struggling, we should cut rates. You know, that's their argument in their mind. And that's a horrible argument. And again, I've said it over and over again like a broken record. It's a terrible argument. The problem is that people are struggling right now, not because they can't buy a home like they want to buy one. I mean, they might be upset about that. But they're struggling right now because prices have increased heavily over the last 5 years. A lot. Prices have gone up a ton. And so people can't afford things right now. That's the root of the problem. It has nothing to do with interest rates, and it has much more to do with inflation over the last 5 years. What's the one thing that's going to very obviously make inflation worse? Rate cuts are going to make inflation worse. And so, yeah, I hope GDP comes in much higher than expected today, because that will signal less of a need to cut rates, a stronger economy. We can focus more on inflation. That's what I want to happen. Again, who knows, though? This is the advanced estimate. Again, there's all these different estimates for GDP. There's the first revision, second revision. There's the advanced estimate, first revision, second revision reports, right? So today's we have the advanced estimate, which is one of the most volatile ones. Why is it the most volatile, or one of the most volatile ones? It's one of the most volatile because the range that it can show up as today and the polarity of everything is much higher. Like, we can come in way over, way under. We can come in as expected. There's just a lot of volatility that comes from that. And so today's advanced estimate is big for GDP. Oh, for sure. Finance streams are going to earn much more than a gaming stream. Sure. It definitely depends on the sector. Finance stuff in general is going to earn more for sure, CD. Do you think the Dow is done, or dip will continue? I have no idea. If we get a bad print, it could go lower today. Sure, PC is tomorrow. Do you ever get tired of trading or just want to take a day off? Sure, of course I do. Anytime you do something as often as I do, you certainly do. Like, I definitely do. But I think low is 1.6, 1.5, 1.6% would be low. Again, we also have jobless claims expected at 237. Chat, 237 for jobless claims. We'll see if it holds. We'll see what happens. But yeah. Rate cuts equal more inflation. 100%. They do. SoFi. I'm in SoFi. I'm in Soundhound as well, I believe. Yeah, I'm in Soundhound. It's kind of a neutral trade. I haven't really lost too much. But I'm in SoFi as well. I'm down a little bit. They need to raise and speed up the process. Raise rates, they're not going to do it. Yeah, they're not going to raise, but they're not going to lower either. They should just pause. Problem with inflation is that average Joe people think once inflation declines, prices will also, but that's not true. Only the rate of the inflation is going down. Right. So what Michael means here, so what Michael Jordan right here means, he says the problem with inflation is the average Joe people think once inflation declines, prices will also do so. To a certain extent, they might. It depends. Like food prices might actually go down, you know. But you guys got to understand, like the rate of inflation that we're talking about, we would like it to slow down. It's not going to go down unless we hit a deep recession or depression, right? That's the only way it's actually going to literally go down. The best we can hope for with inflation is to slow it, you know, meaning we want it to grow only 2% in prices yearly. We want prices to only go up on the year 2%. We want them to only go up 2.5% of the year, right? Because points in time over the last year or two have been ridiculous with 10% plus inflation. So risks are there for sure. But yeah, we'll see. All right, guys, GDP data coming soon. Yeah, Tesla down, T-bills are down. But inflation is vastly different than the cost of goods. Cost of goods is the issue for consumers, for greater issue that the rate of inflation. Sure. Food prices, that's why I said food prices might go up or down. But that's why the Fed likes to look at core PCE and core CPI a lot over base. Lags? What? Lags, what do you mean? Oh, yeah. I don't know. Inflation's not necessarily dead. Are we lagging? No, we shouldn't be. Alright guys, Tesla started to bounce up. It's at 214s. I'm ready for the Christmas months, man. So the holiday months are when everything gets really busy with economic reports, data, all that cool stuff. So greedflation too, John? Maybe. All right, guys. Tesla sitting at 213s. AT&T, high-paying divvy stock. AT&T's had a strong year. Still at a long-term downtrend, though. Lululemon, bro. Listen. See, man, look. People made fun of me. Like, people get so freaking emotional. Their ego gets so freaking high, bro. Like, it's crazy how correct I was on Lululemon. Look at Lululemon here. Like, I've been telling people about this for freaking years and years. I've been saying the same freaking thing. And it's frustrating to me because people just argue on the internet just to argue. You know? Like, I had somebody that I used to know, right? And this person was toxic. Like, they seemed kind of like... You ever know somebody that doesn't... Like, that they look kind of, like, unhealthily obsessed with things, you know? And, like... It's hard to explain, right? They seem a little bit too interested in what you're doing. You know, they get really kind of off and weird, and like they seem kind of like you just kind of like want to avoid them. Like, this is the type of person, right? This person joined my Discord, and when he first joined, he was like, "Hey, I just learned to day trade. You've helped me so much. Thank you for helping me learn how to day trade. I just learned," right? And I'm like, "Okay, yeah, no problem." 3 months later, he's like become a member like of the Discord, and he's telling people he earns $40K a month and that he's been day trading for 20 years, you know? So like the difference in what he originally said versus what he pretended to be changed a lot. But anyways, he really liked Lululemon, and he invested in Lululemon deeply, like heavily, right? He said he was going to use, like, it was his kid's college fund. He put a lot of the money in Lululemon. And, you know, one of the arguments that he ended up getting weird with me about was, I told him, I said, look, Lululemon is fashion. It's a fashion brand, right? It is a brand in which is vulnerable long-term. Why is it vulnerable? It's vulnerable long-term because it's fashion, and trends change, interests change, people change, generations change in terms of interests of fashion. And so everybody liked American Eagle, Hollister, and Abercrombie when I was a teenager. Now they like all this other stuff, you know. And so investing in this long-term, like it's Apple or Amazon or Walmart, is not the same thing. And people have to recognize the difference in something like this. But again, people tend to argue just to argue. They see a lot of strength in it short term, and they think that strength is going to last long term, and it doesn't a lot of the time. Especially with fashion. Fashion's specifically different. Unless you're like a legacy fashion brand that's been around for 30 freaking years, like Nike or Adidas, or even Adidas is probably kind of risky. Or like, you know, there's a lot of examples there. But if it's a relatively new fashion brand, it's one of the worst investments you can make, in my opinion, unless you get caught on like the big run up and you stay there and you sell quickly. But yeah, with that said, Lululemon's dropped 50% this year. Lululemon's down 50%. It's down to 270s, looking really, really weak. And maybe it's time to buy it up. I don't know, but yeah, we'll see. Yeah, I've been talking about the same thing for a year straight, you know. Before this big drop happened in Lululemon, I was saying the same thing. When Lululemon was breaking highs, I was saying the same thing, you know. So again, if you've been watching the stream long enough, you might remember. $10-year versus 2-year. Alright, so there's a lot of them. Alright, so TNX is 10-year. Here's the 10-year. 10-year at 4.3%, 4.2%. If we want to look at 2-year, we can look at IRX. Yeah. So, I mean, short term is still very much over. Long term, though. You know, again, so it's the yield curve is still inverted because IRX, here's a 2-year. It is at 5.17%. Here is the 10-year. It is at, so the yield curve inversion that people are talking about here is it's at 4.2 or no 4.8. Nope, my math is off. Not my math, my drawing is off. It is at 4.28%. So still inverted. What they mean by inversion, right? If you don't know what you hear yield curve inversion thrown out a lot. A lot of people talk about yield curve inversions and all this stuff, right? You hear it thrown out. What they really mean here for this, what they mean by yield curve inversion is this. Okay, what they really mean is short-term bonds. Like, okay, conventional logic states this, right? Conventional logic states that long-term bonds, like loaning the U.S. government money long-term, should pay you more in interest than loaning the U.S. government money short-term. Why? Because loaning it long-term, there's more risks to you, like not making as much because of inflation over time. Inflation rises over time. And so loaning the U.S. government money through treasury bonds long-term is a riskier thing that should pay more versus loaning the U.S. government money short-term with short-term treasury bonds. All right. What they mean when the yield curve inverts is that short-term treasury bonds, like the 2-year here, pay more, i.e. 5.17%, versus long-term treasury bonds, i.e. the 10-year, only paying 4.28%. So that's the inversion that people talk about. Short-term bonds pay more than long-term bonds, right? A decent amount more. Again, 2-year bonds pay at 5.17. 10-year bonds pay at only 4.3% roughly right now. And so that's the main difference that people are talking about when they're talking about the yield curve inversion. And it's weird. It is weird. Anyways, there's the SPY. We're at 540. Chat, we still got 40 minutes left until GDP data comes out. 40 minutes. Hopefully we get some good stuff. But yeah, GDP data drops soon. Jobless claims, unemployment drops soon. Durable good orders drop soon. Right? Durable good orders expected at 0.3% today, month over month. Increase 0.3%. It reports the change in the total value of new orders for long-lasting manufacturing goods, including transportations. Yeah, so durable good orders drop today. Tomorrow we have PCE data. So, how does oil react to GDP data? Well, I mean, it could react a lot of different ways. Oil mostly is reflected by, oil gets spikes whenever we have macroeconomic uncertainty, right? Like oil prices go up. So yeah, if we look at oil and how it might specifically react to GDP, generally there's a positive correlation between GDP growth and oil. When the economy grows, industrial activity happens, transportation increases, consumption increases, it leads for a higher demand for oil, and so higher prices, supply and demand. Economic expansion like GDP growth also can boost consumer and business activities, driving up the demand for oil. Like more goods are produced and transported, and so more people need gas, essentially is what they mean by this. And so, yeah, that's basically what it is. Usually there's a positive correlation, but it's never 100% or definitive. It's never 100% or definitive. It's always kind of up in the air. Yes, no, maybe so. You know what I mean? I'm still a perma bull. I've seen this movie 100 times. I'm a bullish trader as well, long term. But you got to be willing to hold stuff long term in order to be bullish. I think short term anything can happen, and I think corrections are necessary when industries like microchips have gone up as much as they have over the last 2 years. I've been saying this again. People act like I'm a perma bull, right? And maybe to a certain extent I am. When we're talking long term, I am in that regard. But one thing that I've been very vocal about is that things are up a little bit too much for my taste to be buying stuff up. I haven't been buying up a lot of stuff. I've actually been cutting my positions a lot leading into this correction that we're in right now. I've been cutting my positions a lot. I haven't been buying up everything. I've been waiting a lot, And again, I think that's been the right move. I'm still down in my portfolio, of course, from this big drop. But, I think I was able to avoid a lot of it. I'm still up thousands on the year. And I'll probably end up buying up stuff starting now. But I'm only going to buy stuff that I'm willing to hold long term as well. Because I think we're not done. We might not be done with everything yet is the risk, right? So we could have a lot more to go. And I don't want to get stuck in anything crazy. I took LT and big tech. Yeah, Tesla typically has an underwhelming response to earnings. At least the last couple of reports. It's never all sometimes Tesla has good reactions to earnings too. Seen airlines and Jeeps. Yeah, I bought a little bit of Southwest. Early this morning. We bought like 25 shares of them early this morning. So we'll see how that treats us. We're up a little bit in that one, so that's good. Somehow we're still green in Intel. Somehow, man. Jim Cramer said we're still overbought. Did he really? So Jim Cramer tweeting again, ladies and gentlemen. All right, guys. Here we go. 30 minutes. 30 minutes left before GDP data comes out. Expectations of 2.1%. Chat, 2.1%. Some people have it at 2%. Market Watch has it at like 2.1. We'll see. JD and Baba are up. Really? Yeah. Yeah, I don't buy any of these companies. I'm actually at Alibaba, actually. Small position, though. I don't trust these companies. I think risks overseas from governments cause problems. And I'm just not about to go heavy in any of these companies. After what happened with the previous CEO of Baba, I'm just not touching it really heavily. With that said, I'm in it. I'm green, small shares, but I'm also very, very cautious with Baba because of that. You know, understandably so. It should be pretty understandable. Just looking at the options, open interest this morning on the SPY and Q for today and tomorrow, and it's very light on calls and heavy puts on every strike price. Wouldn't be surprised by a bounce. Maybe, yeah. A little squeeze there. It's possible. Let's buy in the QQQ at 30, so at 460 it has way more room. Yeah, here's the SPY. SPY at 540s. You know, it's really weird, though. Like, when you watch the market every day, you start to kind of see things, right? Like, I remember when the SPY was under $400. And it breaking over $400 was, like, crazy big news, right? SPY currently is at 540s. So, I remember this when it happened. I remember when we broke over $400 here. Again, all the bears were telling us that, like, I remember when this happened, all the bulls made fun of me for being bullish here over 400 right there. I remember all the bulls making fun of me. In hindsight, crickets after we've risen, and now they're going to try to act like they were right because of this. But again, I might actually buy this dip. I don't know. We'll see. Again, Southwest down at 25s. What a choppy market it sure is. Yeah. All right, let's do this. Got almost 400 people here. GDP data drops in 30 minutes, chat. 30 minutes. We'll see if we get anything good. Honestly, next week, tomorrow's the biggest day of the year. Or no, not the year. Tomorrow's the biggest day of the week. PCE data is much more important than today, but today's still big. It's still relevant. It's still important. We'll see if we get anything good. We've had PMI manufacturing stuff yesterday, but again, today we have durable goods, jobless claims, good trades balance. All this stuff's very relevant, very important. Let's do this. All right, looking at our poll, we got about 500 votes. 48% think higher, 34% think lower, 18% say I don't know, see results. So again, most people think we're going to come in higher than expected. Zoom out on Tesla, and it's a bull run still. Nvidia's getting some crazy price action. Yeah, I mean, Nvidia's just... Like, look, you put a 15-minute chart, that's a big dip. You put a 30-minute chart, you put a 180-day chart, it's still pretty strong though. So it just depends on context and what lens you look at it. If you look at Tesla under a microscope, it's bearish. Well, I mean, it depends on how far back you're looking at it. You know, a yearly chart, we're slightly down. If you zoom in over the last 4 months, we're pretty green still. If you zoom out over the last couple weeks, we've been down for, you know, we've been down since 2021. You know what I mean? So it just depends. We had 414s in 2021. Yeah, do me a favor, y'all hit that like button. Where are the likes at now? Here, let me see. 88 likes. Let's get over 100, chat. We can do better than this. Let's get 88 likes. Or let's get over 100. We need a little burst. They won't let a video go up today. Wall Street wants more cash before Monday. Bitcoin didn't decouple from the market the way it did the last bull run. However, it doesn't seem to drop as much as the overall market. Yeah, Bitcoin has been holding right around highs for a minute. So Bitcoin's been steady up there. Hey, there we go. There's some likes. Appreciate it. Bitcoin's been mostly flat. All right, guys, SPY at 540s. 540s. Tesla still dipping down heavy. Is it time to buy up Tesla? I don't know. I think tomorrow, remember, chat, tomorrow's PCE. So if you don't understand inflation, right, in a period of everybody pushing for rate cuts and inflation being rampant over the last 5 years with people unhappy, really about price spikes and high prices. In these times right now, all right, it's really important to watch a couple different things. One of the things is GDP. The other one is PCE inflation data. The Fed's preferred inflation metric is PCE data, right? So PCE is what the Fed watches. It's what they look at, what they want to see. That drops tomorrow. And again, it's expected tomorrow at core PCE is the big one. It's expected tomorrow at 0.2%. So again, a lot of people are going to be watching. So core PCE year over year is expected at 2.5. Month over month expected at 0.2. Yeah. Earnings season ends this Monday, meaning companies can buy stocks. I mean, Martin, yeah, earnings season does not end this Monday, bro. Earnings season is starting, like the big earnings week is next week, not this week, right? So it's certainly not ending on Monday. The big earnings season is going to be next week specifically. So like, again, just to put this into perspective, next week, guys, just for next week, right? So next week we have, let me pull a calendar up. Starting on Monday, we have Tilray, McDonald's, Royal Semis, Bank of Marin, CVA. Tuesday, all right, next week, we have SoFi, PayPal, Pfizer, BP, Procter & Gamble, JetBlue, Philips, American Tower Corp. We have AMD, Microsoft, Starbucks, ANET, Pinterest, First Solar, Lemonade, Caesars, EA. We have Boeing, Norwegian Cruise, Kraft Heinz. Again, this is Wednesday. We have MasterCard, Teva, Wingstop, Altria, Kraft Heinz, Norwegian, Boeing. Wednesday evening, we got Meta, ARM, QCOM, Carvana, Western Digital, Riot, Blockchain. Thursday morning, we have Moderna, Crocs, ConocoPhillips, Biogen. Thursday evening, we got Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Block, Marathon Oil, Net, Snapchat, Bookings. Friday, we have Exxon, Chevron, Sundial. So yeah, earnings season is just starting. All right, guys, we still got about 30 minutes left, a little bit under 30 minutes left until data drops for GDP data. So again, we'll see what happens. Crypto going down, stocks going down, everything going down. Yeah, I mean, crypto is not really going down. Crypto is pretty stagnant. But I wouldn't say it's going down. Crypto is right around lifetime highs still. It's at like 65K. Stocks are certainly going down. But again, like I think when in doubt, zoom out. And I think if you put up a SPY chart, I don't know if we can really start to panic from this. You know, I mean, maybe, but I don't know. How will GDP affect the market? Can you explain, please? So GDP signals economic growth, right? So high or low GDP signals more or less economic growth. It ultimately depends on what the market wants. If the market fears inflation, it might want less economic growth. But I would argue that GDP overall, they usually want GDP to come in high. Like they usually generally want high GDP. They don't necessarily want super low GDP. They usually generally want high GDP data to come in, regardless of whether we feel inflation or recession. We'll see though. Again, time will tell. We're waiting. Yeah, I did buy Southwest. We're up a little bit there. Nike is a little green on the day too. That's good. Somebody's talking about my mic. Let me try to fix it here. That might be a little bit better. High GDP equals economic growth, right? It doesn't necessarily mean good reactions or like a positive like response in markets, but it does mean economic growth, which is something that the market does want, tends to want. All right, guys. Yeah, so yesterday, very bloody red day. Is it time to panic, I guess, guys, is the question. NVIDIA, again, if you want to know what the market is going to do, we got to pay attention to it, GDP, of course. We also have to watch NVIDIA right here. NVIDIA down to 112s, 113s, hit lows of 111 yesterday. That's going to be a big milestone spot. So we'll see. Is it ever a good idea to listen to what Kramer is saying or do the opposite given the meme? I mean, I think Kramer has a lot of corporate interests. And so I think you have to look at Kramer under that lens, is that Kramer's trying to protect corporate interests a lot of the time, right? I don't think he actually believes some of the stuff he says. And I think a lot of the time, again, he's just trying to kind of protect corporate interests. All right, guys, 20 minutes. I think we got to watch NVIDIA, though. All right, guys. You guys ready? Let's do this. GDP data coming out in 20 minutes. 20 minutes roughly, chat. Be ready. I use Quant Tower. I use a lot of different ones. I use Quant Tower. I use Trade-Evade. I use TOS. I have one question. When this data release of which we have to trade in indexes or Forex or stocks? That doesn't make any sense. That question's not really sensical, brother. Loading up on all high-paying Divi ETFs from YieldMax. Maybe that's a good time to buy stuff. What are some high-paying dividend stocks right now? AT&T, Exxon Mobil. How much is Exxon down? See, Exxon is still around highs, probably because all the economic uncertainty and weakness. Altria, Verizon, Chevron, Coca-Cola. Hope they drop earnings soon. Coca-Cola's still breaking highs. I'm in Coca-Cola as well, but Chevron. Market tends to slump during election seasons. Yeah, for sure. Yeah, I know Altria. I just don't really, I don't like buying Verizon very much. Verizon seems risky. All right, guys, we got jobless claims, unemployment, and GDP data coming out today. It's a big day, guys. It's a big day. Tomorrow's PC day is more important, of course, but it's still a pretty big day. It's not that I can't, Sam. It's that I don't really want to, if that makes sense. Like, what do I mean I don't really want to? I don't really want to get sponsored by a platform. You know, most of them don't pay enough, to be honest. Like an example of this is if TOS sponsored me. Like, TD Ameritrade will sponsor you, right? Or pay you money or let you be an affiliate. But they'll pay you, like, $5 to sign up or something like that. Maybe it's like $20 to sign up. If they deposit over like thousands of dollars, like it's just super restrictive in that way. Jobless claims are expected. The number is. Do I not have this on screen? Okay, let me put this on screen. Jobless claims also report. Jobless claims also report, and they're expected at. What are they expected? Jobless claims are expected today at 237. $237K. Last time jobless claims, which is unemployment filings week to week, showed up at. Here, so we'll put this up on screen. So yeah, jobless claims expected at 237. Last time they showed up at 243. So this is how many people are filing for unemployment week to week. All right, guys, 15 minutes. 15 minutes. NVIDIA at 112.50s. All right, guys. Here we go. We still got 15 minutes. Gold, is it a buy? Yeah, gold. Gold at 23.63.90s here. So gold is trying to go up. Gold at 23.63.70. So gold has had a weak couple periods though. So like gold hit lifetime highs. I'll put gold's chart up here instead of Tesla. Here's gold. Gold hit lifetime highs. You know, a couple days ago, about 6-7 days ago, gold hit lifetime highs. It hit almost $2,500. Since then, though, it's had a pretty big decrease or pullback. Maybe it's time to buy gold, especially with all the macroeconomic weakness. But I don't know. I think GDP and jobless claims will come in as expected, lower than expected. Yeah, we'll see. Claims will continue to go up for another year. Big layoffs still continuing. Claims are in. Yeah, I don't know, man. I think unemployment is still relatively low. It's at 4.1%. Now, who knows if it's going to stay that way? That's ultimately the biggest indicative thing. Like, I think we should cut rates if GDP starts to look really, really weak. Like, if GDP starts to look super weak, I'm okay with cutting rates, right? But I think we have to see that before we start cutting rates. I don't think, like, again, during election years, a lot of the time, there's a lot of pressure to cut rates early because they want a stimulated, thriving economy. It's not always the time to cut rates, especially at a period where we've had massive inflation spikes over the last 5 years, right? So, you know, I don't think we don't need to stimulate the economy by lowering interest rates just because it's an election year. I think we need to just let it play out and let inflation continue to go down. John, why are some people saying this is a stock market crash when it's not? It's really just a reset. They know it's going to go back up because they missed out on the big moves that we've had over the last 3-4 years, and so they are bummed out about that. And in return, act like everything's a stock market crash to confirm their bias. As well as it's an election year, and so there's a lot of like sensationalized stuff, like, hey, it's the worst it's ever been, like, please elect our person, you know, like that's kind of how it goes during election years. All right, guys, we still got about 15 minutes. We got the timer here. Again, we generally get over 1,000 for GDP, although volume for everything is down. Like YouTube volume is down for everybody. But we get tons of people, almost 1,000 people here at least, because we cover it very, very quickly. And so if you have not already, hit the subscribe button, hit the notification bell, hit the like button, help support your boy here in this channel. We'll see how it goes, guys. We'll see how it goes. I'm ready. I don't call it crash. I call it a buying opportunity. Yeah, for sure, Jones. Like, dude, if we drop enough, I'm buying up everything. This is what I did in 2020. 2020, we had that little flash crash where, like, United Airlines and all these crazy stocks were down huge amounts. I was there to buy up that dip and make good percentage returns on it. Everybody was telling me, no, it was the end of the world, don't do it. I didn't listen and bought up a lot of stuff and made a bunch of money, and it was great. But again, we'll see how it goes, chat. We'll see how it goes. All right, guys. Nvidia's starting to bounce back a little bit. Again, here's gold. Gold's still falling into GDP. GDP is going to be heavily influencing gold as well. Usually SPY at 540s, Nvidia at 112.50s. Hey, thank you, Jen. If it comes in higher than expected, it will pump up. If it lower, it'll crash. What is with it won't change. I don't know, Jay. I'm not sure. I appreciate the $15. I'm not sure what that is, but I appreciate it. But yeah, I don't know why. 15 shekels. It's about $4. Hey, thank you. I appreciate the donation. Yeah, I don't know. We don't know. Like, in general, correct. It's kind of something in which we have. It's like GDP is something that most people generally want to be higher, regardless of whether we're fearing inflation or not. People generally want higher GDP data. And so, yes, I would, hope that we have that obvious correlation where higher GDP equals a positive response, lower GDP equals a negative response. But it's not always that case. And I think with an inflation-fearing market, in an inflation-fearing market, I think it's different. I think it's just different. All right, guys. So 9 minutes, chat. 9 minutes. Shekels. Yeah. That was the donation currency. Declines in GDP along with higher unemployment helps to confirm the recession narrative. Sure. Right. But again, I think in an inflation-fearing market, we also, like, if we have a positive reaction to lower GDP, what that signals is less inflation problems, and so maybe the people fear inflation more. But I don't know. It's super nuanced, to be honest. Some stuff was really overbought. Yeah, for sure. Like I said, Sass, like, I was one of those people who thought we kind of needed to correct a little bit. Like, I thought we kind of needed to correct. I thought we needed to go down. I didn't think that. I wasn't buying up a lot of stuff at these highs, and I wasn't one to tell people that we were about to break highs, right? Like, people kept asking me, should I buy this? And I always told the people the same thing, which is that we were a little too extended for me to buy anything. Yeah. All right, guys, 8 minutes. 8 minutes. Let's see if we get anything good. Look at gold start to bounce. We got a lot of choppy range for the SPY. What I think tomorrow is we're going to have even more choppy range in action. Like, tomorrow, is a period of time in which, like tomorrow, guys, is a day in which is going to be even more influential. You know, PCE data is big. Again, today's the initial estimate. Advanced estimate is what it's called for GDP. So today's the day in which we could have some big movement from GDP. But tomorrow's PCE report is, again, arguably more important based off of what everybody pays attention to and watches. People generally watch PCE much more than the GDP report. Yeah, the correction was necessary. I am shaking. Please tell me it's going to be fine. I mean, it depends on how long you're holding it. If you like, again, that all depends on whether you need money now or later, right? If you need money right now, right? If you absolutely need money right now, then there's certainly risks, and whether everything's going to be good if you're heavily invested in the market is really kind of up in the air, right? But if you hold stuff long term, stock market's going to bounce back eventually, right? Now, who knows when that might be? It might be tomorrow. It might be in 5-6 years from now. But eventually the market's going to bounce back. And I think that's why long-term investing is the single biggest edge play you can ever get involved with, because that's where, you know, you're going to make the most money, and that's where it's going to be the biggest stuff. Like, you're going to make the most from, you know, that type of stuff long-term over everything else. What if lower GDP because people ran out of their benefits? Then market will probably go down. But who knows? You know, but nobody really knows for sure, right? Like, nobody knows what the market's going to do, what it means, anything like that. Nobody knows. All right, guys. We got about 5 minutes left. Give me your last minute predictions for GDP. What do you guys think? GDP high, low? More or less? Better, worse? What do you guys think? You're live every morning at 6 a.m.? Yeah, around 6 a.m. We started a little bit earlier today just because we have GDP. But Q lower by 0.3% in pre-market. High, low. Is GDP going to be higher or lower, guys? What do you guys think? It's expected at anywhere between 2%, 2.1%. This data report drops in about 5 minutes. So again, is it going to be higher or lower? Let me know. Bitcoin 2024 conference in Nashville. Yeah. What's your move if it's low? My move if it's low is to watch the market response. Just because we have low GDP doesn't necessarily mean we're going to go down in price. I mean, that's the obvious correlation. But again, just because we have low GDP doesn't necessarily mean we're going to go down in price. You know, and so I'm just going to, again, nobody knows, chat. Taking up a huge position now is a really, really, really risky thing that I would certainly not recommend that anybody do, right? I do not recommend getting in super heavy in anything ahead of GDP. What if you're looking to short-term trade, especially, I would stop trading right now and wait for this report to come out. Again, we also have jobless claims, unemployment filings expected at 237. This is how many people are filing for unemployment week to week, right? That drops in 4 minutes, chat, 4 minutes. We have durable good orders, chat, expected at 0.3%. How the month-to-month increase in durable good orders, like good purchases, is relevant for inflation, the economy, everything like that. And so, yeah, it's a pretty big report. We got 700 people here. We might have over 1,000 here when the report drops. Although, again, volume's pretty low for everybody and everything right now. I think a lot of people are on vacation. A lot of stock market traders are gone. So, after all those earnings misses, why wouldn't GDP be lower? I mean, I mean, there's a correlation there hidden in the wire, but GDP is not based off of stock market earnings, sir. You know. Now, there's some correlation for sure, but yeah. All right, guys, 3 minutes. 3 minutes. Hit the live button next to the play button. Make sure you're fully caught up on stream. My Southwest position is actually bouncing up a little bit too. Also, I'm going to put this in sub-only mode. So if you haven't already, subscribe, hit the notification bell, hit the like button. I appreciate the love. Chat, thanks so much. Let's get ready. Some trader on Twitter said he lost 250K yesterday. Yeah, but if it depends on whether he has the bankroll to justify that. You know, the biggest problem a lot of traders are doing is that they're trading way above their means, right? Like they're taking trades that they shouldn't be taking relative to their bankroll. Like I've got $400,000 in buying power. I don't trade anywhere near that risk. Like that is such a crazy amount of risk that either the trader's really new or he's got a ridiculously large account. The only way he should ever lose that much is if his account is worth like 15 million. You know, then maybe it's understandable. But still, it's hella risky. All right, guys, 2 minutes. 2 minutes. Hey, all good crypto. When we aren't in a recession, rate cuts historically seem to pump markets. Sure. I mean, historically, rate cuts cause negative reactions in markets, but usually that's because something's broken and we're seeing like really bad job reports is usually what it is. Like really bad labor reports, job reports can have that big type of like negative effect on markets. And that's typically when the Fed gets nervous and starts to cut rates, right? But right now, we're not really in that. Like our unemployment's still 4.1%. We're more so seeing like stock market weakness and stuff like that. All right, guys. A minute left, chat. A minute left. We got a minute left. Let's see what we get. Is this recent market fall a sign of healthy market? In any case, hey, what's up, Philip? All right, guys, 50 seconds. 50 seconds. We got the SPY, NVIDIA. We got gold up on the left. Yeah, let's see. All right, chat. Here, this timer's a little bit early. We still got 30 seconds left. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. Again, here we go. Durable goods. Jobless claims about to drop right now. Let's see what we get. 40 seconds. 15 seconds. Hit the live button next to the play button. It'll make sure you're fully caught up on stream. All right, let's see what we get. First economic report in a long time, to be honest. Long time. 5 seconds, chat. 5 seconds. Expected at 2%. And there's the report live. Durable good orders showed up wildly negative. Jobless claims showed up lower than expected. Lower than expected jobless claims. GDP showed up at 2.8% quarter over quarter. 2.8% GDP quarter over quarter. Much higher than expected economic growth, guys. 2.8%. This is a bullish thing, I think, but it could signal more inflation problems. But again, 2.8% for GDP. Jobless claims showed up lower than expected, and durable good orders showed up really negative. But again, GDP showed up much higher than expected. Again, this is the initial advance estimate, though. So it's a little bit different. But again, GDP data showed up at 2.8% versus 2% expected. Much stronger economy than expected. The market is bouncing back, as I said, because, again, one of the things that we see a lot here is that generally speaking, regardless of what the current economic landscape is, generally speaking, people want better GDP. They want higher GDP, regardless of how much inflation is a problem, risks, all that stuff. High GDP is generally seen as a positive. We're also not having a big reaction. Like, look at how small this reaction is for GDP. Like, we're bounced up a little bit, but NVIDIA bounced it up a little bit. Maybe this will help the market right now. But again, GDP showed up higher than expected, chat. Higher than expected. We got over 1,000 people here, so I appreciate everybody joining us. Do me a favor, hit the subscribe button, guys. Hit the notification bell. I appreciate it. Jobless claims, again, showed up at 235. Chat, 235. Durable good orders dropped today. But again, that's actually a pretty big discrepancy in durable good orders as well. Durable goods, to put this into perspective, reports the change in the total value of new orders for long-lasting manufacturing goods. So manufacturing and durable goods sales had a big decrease versus what's expected at minus 6.6%. We're going to put this up in chat. Minus 6.6% is what it showed up as. And chat, let me know what you guys think about this report. Let me know what you guys think. Again, we'll put all of this stuff up on screen right now. Here's durable goods, jobless claims, GDP data. Again, showing up much higher than expected for GDP. A big pump here. It should be good with mediocre earnings. The market was fearing economic weakness. 100%. I think, again, if there's any time that we're going to have a positive correlation, what this signals, guys, is less of a need to cut rates. potentially more inflation problems, more economic strength, and a more sustainable economy is what this means, right? Now, again, you're going to have some people out there, I can feel it already. You're going to have some people out there saying, oh, these numbers are fake, these numbers are wrong, or whatever they're going to say. And again, all we have to go by is the numbers. The only thing we can really look at is the numbers. I would argue these numbers are optimistic. Now, again, though, guys, I'm going to say this again. All right, for those that don't understand this, okay, GDP is judging the economic growth over the quarter. Quarter over quarter is what GDP reads. All right, it's quarter over quarter. Okay, there's a couple different versions of it. This is what's called the advance estimate. This is the first report that we get for GDP, estimating what the current economic growth quarter over quarter is. All right, and so again, I'm going to go over this really quick so you understand the differences here. But GDP data, let's see if it'll let me. Today's is what's called the advance estimate. And again, the advance estimate is released at the end of this month. The second estimate will be released in August. The third estimate will be released in September. Each release can lead to market adjustments. Investors and policymakers react. This advance estimate is important because it provides early indication of economic performance, but it is the least accurate, okay? It is the least accurate, guys, report. So this GDP report is the least accurate report that we get here. The least accurate, but it also is the initial estimate, right? It's the first time we're looking at GDP quarter over quarter. Again, came in at 2.8%. If you read it below me, 2.8%. So what does this mean moving forward? I don't know. We'll have to wait and see. Again, the next time we'll get what's called the second estimate, which is prelim, and then the third estimate is the actual GDP. So again, based on partial and prelim data, it includes estimates for trade, inventory, economics. But again, 2.8% is pretty good. Pretty good. I think it needs it. Gold actually correcting all the way back down, dropping some. Look at gold's price here. So gold coming all the way back down. All the way back down for gold. Gold's falling all the way down to 23.65s here. Nvidia all the way up to 112.70s. So Nvidia's pumping a little bit. Let's see if it holds. And again, stick around. We are going to day trade the stock market, the futures market live. So again, stick around, guys. We will be day trading this stuff live. Job numbers are great. Recession was also a fear. Sure, right. Like, people fear recession. But again, people fearing a recession, like, again, a lot of it has to do with just bias, right? And maybe I'm biased against it, too, because I don't want us to hit a recession, of course. But I think generally the signs of recession aren't 4.1% unemployment, which is still very low historically, objectively. That's not generally the signs of a recession, right? Is low unemployment. You know, and almost 3% GDP. That's just not the signs of a recession, right? Like, it's an election year, and so some people are really pushing that aspect of it. And again, I'm not even saying I agree or disagree with any of the political narratives that people are putting out. What I'm saying is that right now, these don't point to a recession, certainly. And again, like, just because people are unhappy does not mean we're in a recession. People are unhappy right now because prices have gone up to unsustainable levels. Right? Not because too little people are working, which is really like what influences a recession, right? Is too little people working and spending. And that's just not what we see right now. What we see right now is almost 3% GDP, at least for the advanced estimate. We see right around 4% unemployment, which is still pretty low. The problem right now, again, I'm not saying things are perfect. I'm not saying things are great. I'm not saying things are lovely. The real root of the problem right now is prices are unsustainably high, and they've been that way for the last 3 years since prices spiked up 10% post-pandemic, and now we're kind of dealing with the consequences of all the money printing, quantitative easing, stimulus checks, and low interest rate environment post-pandemic, right? So now we're dealing with those consequences, which is high inflation, and that's why people are unhappy right now. And so again, with that said, we should not cut rates. This data does not signal a need for a rate cut. If GDP data came in super low at like 1%, 0.7%, something like that, I would actually probably pivot to be like, yo, maybe we should cut rates. And if we start to see GDP creep close to those levels, like I said, anywhere, any decimal is a little sketchy, I think. Anytime it's 0.7, 0.8%, lower than 1% GDP quarter over quarter growth, there's risks, right? Yeah, sure, people are taking out second jobs. Absolutely. That's definitely one of the reasons unemployment is low. But again, that is because prices are so freaking high right now. So again, which is the opposite of a need to cut rates, right? Just because, like, inflation spiking and people needing to work more is not economic weakness, right? It's actually, like, regardless of the reason, it's actually economic strength. But it's not good economic strength. It's economic strength because prices are unsustainably high. And so again, what we really need right now is to keep stubborn with rates. We need to keep them high. We do not need to lower them. We do not need to cut them just to stimulate the economy during an election year. We need to keep them high, discourage spending, push prices down, let inflation continue to drop. Right? And with that said, market's going up. SPY bouncing up to 542s. Right now, 542s. I'm going to end this poll because we asked people, do you think today's GDP advance estimate comes in higher or lower than 2%? 48% that said higher, 35% said lower. Since that number is already out, let's ask people with today's higher GDP report, does the market bounce? Yes or no, with today's higher GDP report, does the market bounce? So CWC, he said 2 years ago we had 2 negative GDP numbers. That's a recession by your calculation. 100% that was. Absolutely. They did the Inflation Reduction Act. Inflation went well. We never came out of the recession 2 years ago. We absolutely did. You know, inflation went down. But, I mean, again, look, it's really easy to tell whether we're in a recession. What are the signs of a recession? People can't find jobs. Right? That's super obvious correlation with a recession. Can people find jobs? If people can find jobs and they're having an easy time finding jobs, which regardless of your own specific situation, like you hear very personalized answers to this, like, oh, I can't find a job. Well, everybody's different, right? In general, people can find work right now. That's generally, unemployment's at 4.1%. The real reason people are unhappy is high prices. Okay, those are not the signs of a recession. People might not be happy. I'm not saying things are perfect. I'm not saying things are rosy and great. People are unhappy because of high prices, right? But that doesn't equal a recession, unfortunately. Yes, and yes, we did have 2 consecutive losing GDP quarters. We did have 2 consecutive losing GDP quarters years ago, right? So we did have 2 consecutive losing GDP quarters 5 years. And a lot of people said they did change the definition, and I get it, right? But again, what you're talking about is this right here. And again, it's not a shock that we had that, right? Like the pandemic affected a lot of things negatively here, right? So here's what you're referencing. It's not a shock that happened. Like the pandemic super negatively affected a lot of things. And so the fact that we were having trouble with spending and working and everything right after, you know, a global pandemic is not a shock. It's not crazy. It's not really anybody to blame either. Like maybe politicians handled it poorly in some instances, sure, but nobody could have predicted the pandemic, really, at least very few people. And so, yeah, you know, what happened here is that 2020 happened, you know, the pandemic happened. The Fed was scared because we were about to hit a recession. We were about to hit a depression. And to a certain extent, we did for a little while, right? But what happened is the Fed had to step in and lower interest rates, print money, do quantitative easing, drop interest rates down, stimulate spending in the economy, right? Because what the Fed does, again, for everybody that doesn't understand economics here, the Federal Reserve has 2 different options to control the economy. They want to keep a balanced economy is really what they want. If the economy is weak, like too little spending is happening, too little people are working and spending, right? That leads to recessions and depressions. To avoid that in moments of macroeconomic weakness like 2008, like 2020, like, you know, there's a lot of instances of this historically, but those are the last 2. The Federal Reserve will step in and they'll bring interest rates down, short-term rates, right? And by bringing short-term rates down, what it does is it allows spending to increase, because when people are paying less money in mortgages and auto loans and lending, and they tend to spend more money because they got more money to spend. If you're paying $1,000 in mortgages a month versus $3,000, you're gonna have a lot more money to spend, and it's gonna stimulate the economy in that regard. Businesses are gonna thrive more. They're gonna be able to take out loans more. They're gonna be able to hire more people. All this good stuff, right? So by lowering short-term rates, eventually it trickles into long-term rates like mortgages and that type of stuff. By doing so, it stimulates the economy and stimulates spending specifically. But the consequence is inflation. Prices spike when people spend. When economy thrives, prices spike and people spend. So the Fed stepped in and did quantitative easing, which is a form of money printing in which they create bank reserves and they use it to buy bonds and other financial assets. This allows banks to lower interest rates to consumers, and everybody spent a lot after that environment. Rolex prices spiked. Bernard Arnault, the owner of Louis Vuitton, now one of the richest person in the world. I had a friend that went to Vegas, right, during this period of time after 2020 when interest rates were so low, and he said the amount of people at the shops, like the luxury stores in Vegas, post 2020 after stimulus checks was crazy high. Like there were so many people buying luxury goods and services in these moments that it's a really good like zoom in of inflation. Like this is how prices go up. This is why Bernard Arnault is one of the richest people in the world now. Rolex prices doubled. And so it is because interest rates were so low, stimulus checks were spent out, all that stuff. The problem is that when that happens, prices spike, inflation spikes, prices get worse. You know, businesses can now raise prices because they have such an influx of spending. And once prices go up with CPI and PCE, they don't really go back down. They're stuck there. And so what people are really unhappy about now is that the post-pandemic low interest rate environment caused prices to go up to unsustainable amounts, right? And people are still dealing with those high prices. So what are people dealing with it in? They're having to work more jobs. They're having to pay more money for things that they spent much less money on just a couple years prior to that, right? But again, you got a lot of people pushing for rate cuts. The Fed steps in and pulls the other side of it then. So they do what's called quantitative tightening. They reduce their balance sheet, taking away liquidity from those markets, and that causes interest rates to go up. They also can straight up do rate hikes, which is raising the federal funds rate. And we've been pausing rates for a long time now, keeping them high, trying to discourage and push down the economy. And we're still seeing economic strength, which means we potentially could have inflation problems. The problem is that if we start cutting rates now, prices are going to spike again. And if people think they're unhappy now from the price spikes that we've had over the last 5 years, people are really going to be unhappy if prices spike again, if we get too desperate to cut rates, right? So that's kind of the economic landscape to look at. I hope that makes sense. And you guys can ask me questions and I'll do my best to answer them if you want. But yeah, I hope that all of that makes sense. And again, it's all love here. Like this is like, none of the stuff I said is really arguable. Listen, the last part about rate cuts being an economic weakness is arguable, sure. And so it's all love here. Y'all can disagree. It's all good. As long as you're respectful about it, we can have a civil conversation. But yeah, gold at 2370s. You need lower GDP and higher jobless claims. This is not bullish. The data was higher than expected for GDP, so more economic strength. You know, and again, the other problem is that you got a lot of people that are really, for lack of a better word, biased politically, right? And one of the things that I see a lot, and again, I'm very neutral. I'm not even against you guys. Like, if you're really biased politically for one specific side, I'm not against you. I'm not for you either. I'm very moderate, neutral, like, go by policy purely. I don't really root for any politician. I don't really vote either, and I know where some people are going to hate me for this, and again, it's all love. I hope you guys can understand. I think most of the time they're all two sides of the same coin, you know, but I think a lot of people, especially during election years, they get really sensationalist, right? So what does that mean? So during election years, the strategy of politicians is that whichever side is in power, okay, the other side wants to make that side look the absolute worst they can so that their side gets elected. And so what happens? Everybody talks about how bad the economy is, regardless of whether the economy is really good or really bad. Their side's saying the economy's terrible and weak, and you got a lot of people mirroring that sentiment because they're super invested politically. And again, I'm not even saying you're right or wrong. All I'm saying is right now, the problem is not economic weakness. It's just not. The problem is too much spending has occurred and prices are up to unsustainable levels. That's the root of the problem right now. It has nothing to do with too little people working. Maybe not nothing. It has less to do with too little people working. It has more to do with people needing to work more because prices are so freaking high, you know. And it's all love here, guys. I hope you guys understand. I hope I'm not I hope I'm not pushing people's buttons too much saying what I'm saying. I'm just wondering what is keeping GDP up. Probably spending. Too much spending is happening, you know. Prices being really, really high contribute to it, sure. You know. Signaling deflation. I don't know if it would signal deflation. I think jobless claims is not the unemployment report that you want to look at for that type of stuff, right? Jobless claims is a week-to-week unemployment filings report. How many people are filing for jobless claims is how many people are filing for unemployment week to week. It's not really a macro look, it's a micro look at unemployment, right? So the unemployment number you want to look at specifically is the regular unemployment report. Last time it was 4.1% to gauge whether we're in deflation or not. And tomorrow will be a really good look at it as well, because tomorrow is when we have PCE inflation data coming out, which is really, really important and really, really big. So, all right, so we bought some Meta, we're green. We bought some Southwest, we're green. Is there going to be a market crash if we don't get the expected September rate cut? Are the odds likely to be the market would take if this were to occur? I don't necessarily think so, Phil. I don't think we need a rate cut. I don't think we want a rate cut. I think people think they want a rate cut, but they're not realizing that they're hurting themselves by wanting us to cut rates. They're benefiting mostly lenders and banks, and they're hurting themselves. You know, like, of course, again, post 2020, the low interest rate environment caused a lot of lenders, mortgage brokers, real estate agents to thrive for about a year or two. You know, so a lot of lenders in those sectors made a lot of money in those periods of time because interest rates were so freaking low. Everybody wanted to buy a home and get a lending and all that stuff, right? The problem is that it didn't last because eventually inflation spiked up to 10%. The Fed then started raising rates pretty aggressively, raising interest rates aggressively, I mean. And so mortgage rates went up from like 2019, 2020, they were 2.5%. You know, now they're 7-8%. You know, for a while they were higher than that. And so, you know, to go from your business thriving at 2.5% interest to your business basically just getting pushed down at 7-8%, there's a lot of bias there where they're like rate cuts. But again, that's going to hurt the average Joe. Right? Outside of just the pure, it's cheaper to buy a home with low interest rates, right? Outside of that, it's going to hurt the average Joe, and I think people don't realize it's going to hurt them more than it helps. We'll see if we get a bounce today. Stuff's down a lot. You gotta remember, most people have lots of loans and mortgages, though. Personally, I have little to no debt, but the majority of people do, and therefore interest rates being high hurts the majority. It depends on when they got their loans. You know, and so sure, that's why I said outside of buying homes and lending, sure. But yeah, I still think we should continue to pause rates, personally. I think we should pause them until next year, really, and then really get inflation under control. And then, you know, especially if the economy is still showing strength. Like if these GDP reports hold, you know, we should definitely keep rates as high as we can for as long as we can. Gold's still dipping down here. All right, guys. So, let's see what we get. We are going to be day trading today. Again, stick around. We are going to be day trading today. So if you haven't already, hit the subscribe button, hit the notification bell. Hopefully we get some good action today. Honestly, it's a crazy day for day trading, I think, right? With all the stuff going on. All right. What do you guys think? I guess let's do a, like, let me see what my poll shows here. So again, like I have my poll. What do we do through this poll? So we asked people, with today's high GDP report, is the market balanced? 62% say yes. I'm gonna ask people here though, right? Here's a good question. Do you think we currently are in a recession? Not recession, inflationary market. Again, my vote would be not recession, inflationary market, but AI will create more growth. Yeah, we'll see. All right. Yeah, it'll be fun to see what happens. I mean, I'm ready for whatever. You know, honestly, in periods of a recession, it's some of the only times in markets where we actually have decreases in inflation, actual like CPI, PCE inflation. The only real times we get that, like here's a good example, right? So here's CPI inflation graph. Right, and this is a really good look at what all the concepts and topics that we talked about today. But like, look, so, and we've gone over this a lot. You know, again, pre-2020 or pre-2008, you know, inflation was up here. During the economic recession of 2008, it was one of the only periods of time where prices actually went down. You can kind of see prices actually go down there. You know, the only other time where we got close to that was after 2020 and the pandemic, where prices got here, maybe a little bit in 2015. But prices don't go down, they slow down. And again, the problem with the low interest rate environment of 2020 is prices did this, right? So what do you think is going to happen if we lower interest rates to those levels again? Prices are going to go like this, you know, and once prices get bad, they can really get bad really, really fast. And so I think people just have to be smart, and they understand that they're preaching a lender narrative, pushing for low interest rates, and it's going to be a double-edged sword that people don't realize. You know, prices are going to go up, and it's not going to be fun for them. But I also understand, like I said, some people are getting lending and all that stuff. Market's still moving up. SPY moving up. So, yeah, we'll see. We'll see what happens. All right. Let's look at our poll here. So again, 26% of people say we're in a recession, 25%, 75% of people say we're not in a recession in an inflationary environment. And that's kind of what we're in, you know. Again, I think people have to get outside of the habit of, like, I think people that are, and again, I'm not saying I'm against you, but I think if you really root for one side politically, you start to kind of push those different narratives, right? And what I really want people to do is kind of stop, take a step back, stop rooting for either side, and look at the economy objectively, right? Everything's not perfect. Everything's not rosy. Everything's not great. Certainly there are problems. Certainly people are unhappy, right? But it's not, people aren't unhappy because we're in a recession and they can't find jobs, right? People are unhappy because prices have gone up too much. They have to work multiple jobs, you know? And so that's kind of opposites. And again, it doesn't mean things are great, but, you know, I digress. Yeah, Canada cut yesterday, I think. Was it yesterday? The Bank of England also cut rates as well, right? So, but again, they don't really do what the U.S. does. And again, it's still pretty expected that we cut rates in September. Not next Wednesday when we have the FOMC decision here. You know, the next Wednesday, the 31st, is going to be one of the biggest streams we've done lately, which is the FOMC decision. And so that'll be interesting to see what happens. Yeah, I don't know, Larry. So Larry says, John, another problem is all the profits are being held up at the top and not being shared with employees and the people that are creating the profits. I don't know, man. Like, you hear this argument of like somewhere along the lines, you hear this argument of like business owners need to like basically share all the profits with the employees, right? But that's not how it works. You know, like I get in like an ideal situation, everybody's going to be happy and everything's going to be perfectly even, but that's not life, right? Some people get born in a better situation. Some people get born in a worse situation. You know, some people are tall, some people are short, some people are smart, some people aren't so smart, right? Life is unfair. And businesses take risks, right? Like risking their hard-earned money to start a business is like I said, it's a super risky thing to do. If you're taking massive risks, you should reap the rewards from it. I'm a big capitalist, right? And again, I'm not really one-sided politically, but I'm a big capitalist, right? And I think if you trade stocks or invest and you're not a capitalist, you're a huge hypocrite. But I also understand, like, I'm okay with billionaires getting taxed more, you know? Like, I'm okay with free college. I think college should be free, and I think we should adopt the standard of the rest of the world and have free college. But like again, I'm policy based, right? I'm not really one-sided politically, and I think that's what most reasonable people are. But you know, that's probably biased too, I guess. Yeah, the owner risked everything. And again, if the employee doesn't like it, they should start their own businesses. They really should. Like that's how you build wealth. Start your own businesses, and you can. And you know, monetize what you know. Figure out what you know well, monetize that, and start your own business. And I think people would have easier success than they realize in that way. You know. How do we pay for college for all? I think we spend our tax money on a lot of dumb stuff that is wasted. And so I'm okay with some of my tax dollars getting spent on college, right? But college prices need to go down dramatically. I think big education has had a ridiculous monopoly on prices, and, you know, the standard of everybody going to college has changed. You know, back in the day, everybody didn't go to college. It wasn't meant for that. People worked a lot more trades or were pushed to do a lot more trades, and they made great money, and they had a good life doing it. Nowadays, everybody in school every family pushes their kid to go to college, and I don't necessarily think that's the best idea. I also believe our tax money can be spent on the same kind of subsidies for trade and trade schools and stuff like that too. I'm okay with that, you know. Anyways, Nvidia started bouts here. We're gonna get ready to day trade, chat. Yeah, so again, we're getting ready to day trade. Let's do this. Again, as soon as we end the stream, it should immediately bring you to our day trading stream. If it doesn't, for whatever reason, you can go to this link. But again, as soon as we close the stream, it should immediately bring you to our day trading stream. And so again, let me make sure you guys can go to the stream. If it doesn't, for whatever reason, again, here is the stream we're going to. Right, so here's the stream we're going to. Join our day trading stream. We're going to day trade stocks and futures. If you want to continue this conversation with me, join our day trading stream. There's the link. But again, as soon as we close this stream, it should immediately bring you to our day trading stream. If it doesn't, go to that link in chat. And yeah, we'll see what this looks like. I'm ready. Again, as soon as I close this stream, it should immediately bring you there. I just want to make sure it does. Yep, it does. Okay, cool. All right, guys, I'll see you guys over at the day trading stream. Let's try to make some money today in day trading. We'll see what happens. But yeah, let's go.